Yeah, that is a dangerous gold long. I wonder why why you long that. Mm. Mm. It was up, Cave Trader. Probably gonna be another one of those weeks. Mm. Probably gonna be another one of those weeks. Well, the market believes that we're not going to get a rate cut, so at least that is out of the way. Now, all we have to do is see if Powell actually goes through with it. Hopefully, there is no data that would suggest that we won't get a rate cut, but I mean, it did go down, but 87% is still good. That's really good. Mm. A 50 basis cut. He says your data says that it's most likely volatile. We're showing you that it's volatile, Cave Trader. I agree that it will be volatile, but what data are you looking at? I mean, I guess if that's how they want to run their site, then that's how they want to run it. Yeah, what's up, Taven? You said that you're in sales right now. Just don't get too comfortable. I mean, the market is in a downtrend. We are making lower highs, but we're making equal lows. That's never a good thing. Making equal lows, but then we're making lower highs. This could be a bear trap, but I don't think so. If you're going to short this, and I'm not just talking about you, I'm just talking about anybody that chooses to short this. Just make sure your stop is in break even because this thing can turn. I'm thinking that potentially we could see a move back down to Friday's orb high potentially. We could. I know that there's support at 360. I know 360 can give the bears some trouble. I can see some bulls coming in at 360 for, a bounce. So I'm going to keep my eyes on 360. Uh with this big move up, there's a lot of FOMO buyers that's waiting to buy a dip. It's going to be a stressful short. Not saying that the shorts won't work. It's just that I think a lot of the short setups will be stressful. They will be stressful. That is for sure. I don't think that we're going to get a clean short. Unless it's like an instant news short that pushes back into a previous area of support of a break and retest or something like that. And then we'll get the late aggressive bears to hold the bag. But so for on the schedule this week, looking for a previous swing range, previous swing. Mm. Oh. So you're in long right now, Cave Trader? Yeah. So you say that you're in long. Honestly, I'm just gonna wait for more information from the market. I'm just gonna wait for more information here. I don't know when this happened. This is an unrelated topic though, but well, I guess it just feels weird to say, but I'll say it because for whatever reason, it's I feel like I'm making better trading decisions, or at least I'm making less emotional decisions. But from time to time, I kind of change and switch around my diet to see which diet is going to give me the results that I'm looking for without too much effort. And right now, at least for this year, I've added more beef into my diet. Usually I would have like maybe a steak like maybe here or there, but steak is now more of a mainstay in my diet now. Like it's almost a daily thing that I eat. I don't the way I cook my steak is in a pressure cooker. So with water, all the grease and all the other stuff is caught at the bottom. I'm not cooking it with oils or anything like that. It's just steamed. It comes out really great, and I just eat it for obviously for the gym, protein, all the other stuff. But one thing that I have noticed is kind of like what I guess these influencers say about the what is it, the carnivore diet or carnivore carnivore diet, or whatever the hell they're calling it, where they just eat meat. I believe in a more balanced diet with meat and greens, so I'm not just eating meat. There's a balance of greens as well, but um, I do find myself making less emotional decisions. I find myself thinking more clearer than usual. Like I would have maybe an opposing thought to a thought, but lately it's things just has been very clear. It's been very clear. Uh, Before I struggled with FOMO, but now it's well, I don't want to use the word struggle because it's not a struggle. It's I allowed FOMO to dictate my trading decisions. Now it's, honestly, I'm just going to wait for more information before I place a trade. If I miss it, I miss it. But when I take a trade, I know it's going to be the winner because I patiently waited, or not necessarily I know, but it's highly likely to be a winner because I waited for the setup. And if I miss the setup, I'm not as emotionally triggered as I am before. So I don't know if that's just maybe more testosterone from the meat. I don't know. From the beef. I don't know. But that is definitely one thing that is for sure that it's like, okay, that's fine. I'll just wait for the next trade. I thought I would share that. Not suggesting that anybody try that if it's against something that you believe, but I'm just sharing something that's currently happening with me right now. But I have no desire to take a trade right now unless I see something that's going to work in my favor. Right now, the market does look like it wants to short for sure. But then I also know that if I get into a short, it's going to be stressful as hell. It's going to be super stressful. I might be in this trade for multiple hours, and I don't want to hold a trade overnight, especially when I'm trying to get some rest after the stream. So I'm not interested in taking a trade. I looked at the Nasdaq. I looked at ES. Gold is trending down. Uh, I have no desire to take a trade in gold. No desire whatsoever. Potentially we could see. I mean, actually, let's look at the higher time frame. I mean, the higher time frame is telling me that potentially we could see a bounce here at 30 at 404, 403 potentially. We got a previous high right here. Is lining up with the fib, and this is usually how I take trades. Like I'm just lining up previous area of supports with the fib. That usually is I usually get decent entries just doing that. But I'm not blindly getting into areas using the fib. I'm just lining them up as close as possible with fibs because this is how the algos are making their decisions anyway by measured moves. So I figured that I might as well, if the algos dominate this market, then I need to align my trading with their decision making. So, um, but I guess we could see one last hoorah. We could, but I don't know. I'm just gonna wait because after 9:30, 10 o'clock, gold just gets too loose. These setups, they'll most likely work, but uh, with volume, you'll probably have maybe 1 to 3 points in drawdown before the market begins to turn in your favor. But after that 9, 10 o'clock, man, she gets too loose with the grabbing liquidity. She can go 5 points, 6 points past an area of support, go to the next support, and then super bounce to make up for missing that first one. So I've noticed that through my back testing, and you can just look at it for yourself. That after that 10 o'clock hour, you can just see that gold just kind of just goes crazy. Like right here, you can see that it just goes, it just doesn't do anything. But then once we get back into that area, you can see that it trades structurally. And she just continuously does that. She just gets so loose overnight. So I just try not to take trades on gold after a certain point. Or I don't try. I don't take trades after gold, after a certain time on gold. But I do have a nighttime account with gold though that I use that I try to get into positions way before that cutoff time for me. So actually, I don't know. Hey, what's up, Tony Gold? What's up? I didn't even check to see. Honestly, if they didn't do it, honestly, I wouldn't even be mad because I really don't care for it. But okay, so it renews on the 29th. Okay. That means I have two evals renewing on the 29th. It's in 5 days. Okay. But so far though, mm, I'm just going to keep this range. Can probably clean up a lot of these ranges though. Probably this range right here doesn't matter anymore. It'll probably get traded through, honestly, because it's already served the purpose already. So it's going to probably get traded through. It wasn't necessarily a significant range. This range hasn't been retested, so I'll push this into the future. But it's probably going to get ran through as well. Yeah, probably guys probably can't see that. And that range is probably going to get ran through as well because the market only tapped this range once, and we haven't come back to that range. Mm. I'm going to take this range off too. But this golden range right here, if we get past this, if we get above and find support above 24K, this is probably going to be support for a very long time. That 24K mark is going to probably support for a very long time. The reason why I said that is because of how the market used this area as a rejection. We got a big move away from 24K. Shit, we pushed down 1,000 points. 1, 2, 3, 4. In about 4 sessions, we traded 1,000 points to the downside from this area right here. So that just tells me that that area was the market's objective. And once it got to that objective, we got price to sell off from that area. So we could see one retest. The only question is, once we get back to 24K, will this be the fake out? Will we see another small rejection back down, or will we see a situation where the aggressive bears that's thinking, man, we had this big move from 24K. There's probably passive sell orders sitting in this area. And then you're going to probably have new aggressive bears trying to get in on this and also get short here. And then the market squeeze everybody out of their positions and pushes this thing up to about 24-1, maybe 24, 150, 200 potentially, maybe this 100 point range. And then we see a rejection. I think that the market is going to probably swipe as much liquidity as possible and push this market higher. That's what I think is going to happen because that's what usually happens anyway. The market doesn't do anything new. I do think that we could potentially see a rejection around maybe 255. I'm sorry, 755, 775. And then another area from 795 to about 815. We could see an area, could see a rejection from that area. But like I said, if we get above that, then 24K is the next area. And then that's going to decide whether or not that the market continues to go up higher. I mean, for whatever reason, people are trying to predict the next drop of this market like Trump is not the president. And whatever reason, I'm getting an error message. Uh, Seriously. Mm. Well, as long as the stream is not. Mm. I guess I'll change that tomorrow. I'll change it tomorrow. I swear, like I don't touch this thing and this, and for whatever reason, stuff begins to change. I don't understand it. So it's saying that the resolution is for whatever reason changed. But kind of going back to what I said, uh that's my outlook on a that's my outlook. And I guess what we should do right now is put in this week's CFTC data and see what the institutions are looking at this week, or at least get an idea what the institutions are doing this week. Having this data last week was definitely beneficial. This information was very valuable last week. With this information, we was able to build a bias of what the market could potentially do last week, and it did exactly what we talked about. With so much, with 64% of the institutions long, and with the market being so high, the only reasonable or logical response from the market was to dip down, go into previous areas of support, run the liquidity out those areas, and then make a big move back up to take out all time highs and potentially create new all time highs. It was the only logical action for the market, and that's exactly what played out. Because there was no way that buyers were going to buy at those highs without a significant pullback. There was just no way. It was highly unlikely for that to happen. All right. So it does look like the market is long this week, but it's not as long as it was last week. All right. So we got 33,000 or about 34,000 contracts in net long, still above the average of 28,000. We're still above average on longs here, and we're under the average for shorts. So, I mean, I think it's pretty clear. I can confidently say that we should expect another big move this week, at least a bullish move this week. At least. That's interesting. Huh. So it looks like the institutions added to their. Okay, never mind. the institutions or the commercial and got 200,000 contracts short this week. I mean, last week was 2,000 or 210, but you can see that they usually keep it under 200,000. And this is the second week where they had over 200,000 contracts short. Right. So the commercials right now are 56% long, or I'm sorry, 56% short, and they're only 44% long, which you kind of have to flip these values because they're hedging against their overall position. So because they're overall short, then that means that the commercials, they believe that the market is going to continue to climb higher. So I'll definitely be on the long side this week. Glad to have you back, Cave Trader. But okay. So let's really look at the charts right now. I mean, what are some areas that we can look at that we can kind of mm, I mean, we already had the market. Mm. I mean, if we can get the Bears have definitely have a lot of work ahead of them. They definitely have a lot of work ahead of them. I doubt that they'll be able to accomplish their goal. It's highly unlikely for the Bears to accomplish their goal, but if the Bears can break past that low at around 495 and hold under 495, we could potentially see a move back down to about 330, 350, 330-ish. I'm still looking at how the market responds around 360 though, because 369 was that previous day high or Thursday's high. But around 330-ish is where we got that breaker structure to the upside. So about 360 to 330 is an area where I'm gonna keep my eyes on. But the Bears got to first defeat that 495 level and hold under 495. If they don't hold under 495, then the FOMO buyers are just going to step into this. Yeah, I mean, I would have like I said earlier, K Trader. I would wait for more information. I would wait for more information. The market is probably not going to move until about London, where that push of liquidity gets into the market. Because right now, we don't have that much volume in the market. I mean, surprise, surprise. We only have 89,000 contracts being traded right now on the Nasdaq. That's nothing to move this market at all. Nothing. If we had over 150, 200,000 contracts being traded right now, maybe. But with this low volume right now, the best thing to do is just to collect data, collect the information, and then just come back during maybe London around 7:30 Central, 8:30 Eastern. See what the market is doing, how it set itself up, because we know that around that 7:30 Central time frame, that's when a lot of news come out. So the market is always setting itself maybe an hour, 2 hours ahead of that time frame. So if you're up around 5, 6 o'clock, the market is usually setting itself up around that time because obviously we have news coming out. And that's a great thing about having news come out at a certain time. So the market can prepare itself for moves once we get data drops. The Chicago Fed Activity Index for July, new home sales. So outside of the Chicago Fed National Activity Index for July, let's actually look at what the heck that even is. It says is the monthly index designed to gauge overall economic activity and related inflationary pressure. Okay. New home sales. Honestly, I would even purchase a home until Powell start cutting these damn rates and get these rates down. Because honestly, I really don't. So I'm not a real estate guy. I don't particularly care about, I guess, this portion of the economy. But the one thing that I do know is that if you weren't lucky enough to have gotten your home during when interest rates were super low and they were basically giving you the house for free, right now is definitely not the time to be a buyer. But I guess, well, maybe, well, I don't know. I guess it really depends on how you look at it because a lot of people are trying to sell their homes and they're selling their homes for less than what is worth because they're just trying to get rid of them. It's not a buyer's market and it's not a seller's market either. It's a who's ever in the right place at the right time kind of market because either both sides of the market is feeling the pain. I've seen a lot of real estate influencers talk about how a lot of people had to update their listings and you would see multi-million dollar homes sell, like as an example, and this is an exaggerated example, like maybe a $500 million mansion is selling for maybe 20 or 50 to 20 million because nobody is trying to buy in this market with these high interest rates. And I do recall Trump speaking about that as well, saying that he's concerned for the home buyer because interest rates are just so high. Nobody doesn't want to buy a house, and I wouldn't buy no damn house. Not now, with these interest rates being so damn high. So apparently, is a orange folder news. I don't know what FX Street uses to gauge theirs, but it's medium. Tuesday we got durable good orders. Wednesday we don't have any significant news. Oh wow, we got GDP on Thursday. Wow. So we got GDP on Thursday. We got pending home sales. And as I said, I don't think These numbers are going, let's actually look at this. Maybe I should start begin to educate myself on this topic. So with pending home sales, 0.8%, 0.3% is what people expect. And we got PCE this Friday. So I mean, I should have known that. Usually when we have GDP, we have PCE as well. So Thursday and Friday is definitely going to be on everybody's radar. Hopefully we don't see the market slow down for GDP, because once we get, so PCE, for those that are not familiar with what this is, PCE is calculated in GDP. So usually what happens is we'll get the reaction, we'll get the initial reaction from GDP. And then once we get the PCE data to come out, uh, you can kind of already assume, depending on how the market moves, what direction is going to go in. Because if GDP is good, then PCE is going to be good. The reason why a lot of market participants are focused on that PCE number is because this is what Jerome Powell says that he personally uses to gauge when he makes decisions to cut rates or not. The personal income and personal spending, because he believes that this number is more accurate and it better reflects the consumer. So it doesn't matter if he's right or not. It all that matters is that he uses this data to make his rate, his monetary policy decisions. So the market is just playing his game. So Thursday, Friday is definitely going to be on everybody's radar. Hopefully, it doesn't slow the market down. We don't have any news on Wednesday. Durable good orders, pending home sales Tuesday. Or was that pending home sales is on Thursday? I apologize. It's the durable good orders on Tuesday. Consumer confidence. The Richmond Fed Manufacturing Index on Wednesday, but that's happening at 9 o'clock. It's all going to be bundled into one event. Yeah, so I guess that's about it for this week. Hey, what's up, Chalk? What's up? Yeah, I appreciate you tuning in, man. Yeah, this market is definitely slow for right now. I don't expect anybody to make a move. I think everybody just has to wait for London. You guys, we just got to sit on our hands and wait for in London. If you're already in this short, I would protect the profits, because you already know how easy it is for a winning position short can turn into a loser. I definitely will be doing a lot of things differently this week, though. I will be doing a lot of things differently this week. Actually, let me do that now. So I have decided that I will be copy trading moving forward. I'm going to spread my risk across 4 accounts, and I'm going to trade my accounts as if they're small personal accounts. So I'm not going to trade heavy size. What I'm going to do is actually reduce a lot of this. So instead of trading 15 contracts, which honestly, I don't think that's even bad for ES. That's not bad for ES, but If I have, so what, these Apex accounts is $7,500 of drawdown, I would be able to only trade about 5 or 6 contracts, micro contracts at that. I wouldn't be able to trade a full mini. Now, a lot of the brokers, discount brokers, will allow me to use a mini, depending on how much money I have in the account. They will allow me to do so. But if I'm going to be completely honest, if you only have $7,500 in your account, in your personal account, will you actually be trading minis? Maybe some people will, but it just takes one mistake to lose the entire account. So, and getting into the mindset of treating these accounts as if they're small account challenges, I'm going to reduce my trading size, but I'm going to copy trade it so it doesn't feel like my time is being wasted. It allows me to stick to the process and not necessarily focus on the profits. And I've done the math, and it shouldn't be a surprise to anybody, but uh, trading small size, consistently getting gains over 25 to 30 days, depending on how much you make. At the end of the month, you can be up well over ten, $15,000. Let's just say that you make $450 daily. Where's my calculator? Hmm. Actually, give me a second. I just saw something I didn't like. Anyway, I guess I'll figure that out later on. But calculator. Let's just say that you make $450 at the end of the every day. There's what, 20 days, 21 days in. I think just about like what, 25 days. We'll just use 25. It's probably like 20 or 21. We'll use 25. You made $11,000 at the end of the month, just making $400 daily. And that's if you make the $450 daily. Not saying that you won't, but and then you got that across 4 accounts. You made $45,000 trading small size, making 400, 450 a day, copy trading with multiple accounts. That's $45,000 without risking or blowing the accounts by oversizing, over leveraging, and trading without a plan. And I was doing the math, and I'm not going to sit here and say that I was disappointed in myself, but I was disappointed to the fact that for whatever reason, this became clear to me recently, but it wasn't clear to me before. I was trying to get this type of success trading one account, trading heavy size, when I could have safely made this by copy trading multiple accounts, trading small size. So we can easily get $400 a day. That's nothing. That is absolutely nothing. We can easily do that. We do that almost every day anyway. We make more than that. So that's definitely going to be the focus moving forward. Actually, we probably might make close to about 360, depending. I still haven't decided how much contracts I want to trade and how much I want to risk per trade. But if I set it up to where I only lose $180 per trade, but every winning trade is at least $360. Excuse me. Let's just see, $360 times 25. And that's still good. At the end of each month, $36,000. That's good. That's good. And at the end of each year, you're making almost $500,000 a year. I mean, the name of the game is compounding your wins over time. And if you do it that way, if you do it this way, you can have a couple of red days, but still be able to come back and make your money, break even at least. And let's look at what gold is doing because it's lighting up right now. We'll see what gold. We'll see. I mean, so far, if you were able to get in at the exact bottom at 405, a 10-point move would be above this high, retesting the value area high. What I don't like the fact that the market is trending down though for longs. I don't like that. So the market would basically have to get above the 200 EMA. You got a resistance trend line coming down. You have the 200 EMA, the long-term EMA, well above price. That's never a good sign. This could just be, yeah, actually, I think that's probably what it is. I think this is probably what it is. Oof. This looks like this could be an area. This could be a hot spot right here for the bears. You got a resistance trend line coming down. You got the 200 EMA right here. You got a high, a break of structure to the downside, breaking this previous area right here. So I could see the bears make an attempt right there at that trend line. And then the bears just step in, and then we could potentially see a move down like that. But if the bulls can overcome that, I wouldn't look to buy this at the first breakout. I would look to buy this if you're trading gold. I would look to buy it that retest. But honestly, that the way that this resistance trend line is coming down, I don't know. I wouldn't want to buy it there either. I mean, I guess the bulls can do it, but at this particular angle, it's just highly unlikely. Usually, usually the bulls like to actually buy it when it gets to the apex, like right here. The bulls like to buy the apex of a resistance trend line. They like to break out once price kind of gets closer to a triangle, break out, and then they'll buy this because now they have all this upside versus only having, because they only have this much real estate right here versus if they buy it right there, then they have all of this real estate, which if you're a bull, which one would you rather have? I would rather buy it as low as possible. I wouldn't even want to take a gamble right there. There's going to be people that buy it, of course, but I wouldn't take that gamble long. So that's not a very highly probable long, but people will buy it though, even though it's not a highly probable long. Yeah, YM. I actually purchased me another straight to funded account. So this is my third straight to funded account with them, the 150K. In my opinion, I think that's their best account. I believe that that straight to funded 150K at a 40% discount is their best account. At a 45%, it's like 360. 40%, I think it's about like 420 or 430. I wouldn't buy it at a 35% discount. Yeah, to me, it's not worth it. The reason why I enjoy that account the most is because of the drawdown. I have $6,000 of drawdown to play with. I think that's the biggest drawdown in the game right now, especially for a straight to funded account. That's pretty big. 20% consistency rule on top of it. So it just forces me to focus on the process and not the profits. Yeah, I can get the profits for sure. But in 7 days, you have to have 20% consistency. So 9,000 divided into seven. So I can make $1,200 a day, which honestly I can do that. But uh, one bad day can kind of, because if I'm trading 1 to 2, I mean, one bad day is a $642 loss. I can only take $3,000 out on the first payout, which is half of the account. So it will only, I mean, it'll put me back to my starting balance at 6,000. But if you kind of do it over time, if you do it over time, let's just say that you make what the three, no, you kind of need to make like what 450 for the 150Ks, you need at least 450 for 25 days. I mean, I guess you can also trade for 30 days too. But we're going to go for 25 days. So if you take the $3,000 payout, you still have 82,000 left in it. And the beautiful thing about this is that now every 7 days you can get a payout. So 450 times 7, every 7 days you can get a payout. Just trading $450 every day and you can just get a $3,000 payout. So this is the hidden benefit of trading small size over time, getting to that threshold, just trading the 25 days, making the $450 or whatever. And once you get past that hump, every 7 days, you'll get a payout. And your balance will stay the same because you're just taking out your profits every week. And you're not even touching the balance left in the account. I mean, that's just to say that if you just stick, you have a plan, you stick to it, and you allow your account to grow over time. Now, if you're just trading randomly and getting random results, then of course, uh, having everything set up this way would be challenging. But I mean, if you have a system, all you got to do is just wait for that first 25 days, and then every 7 days you can get a $3,000 payout. That's why I feel that this is their best account if you can take advantage of the rules that they've set. And you don't have to risk the account every time just to get a payout. So, just food for thought. So, Chalk says that you're in long on the ES, looking for a push to 64.8. Let's look at that real quick. Oh, so YM, you got invited to the VIP group. Congratulations, man. Congratulations. I know Investor Z actually got invited as well to the VIP group. All right, so we're looking at ES. ES, you're saying that you're looking for a push to about 64.8. Huh. Well, let me ask you this. So, what were you looking at to buy it here? What were you looking at? If you don't mind sharing. Because I do see that. We do somewhat got to break a structure right here on the ES. I mean, if price pops back above this line, then maybe. But if this thing gets a stronger close underneath that break of structure right there, I don't know. I don't know. The ES is clearly making lower highs. And then if this thing closes, this will be its first lower low. It's an equal low with lower highs, but this will be the first lower low right here. So, yeah, and we do see a triple top right here as well. Hmm. Well, depending on your risk tolerance, last week's close is right here around 467. So potentially we could see a bounce there. Mm. Mm. Yeah, maybe. So just hope for the best, but prepare for the worst here. I mean, the ES is pretty straightforward. Uh, like I said, I'll be trading the ES. I'll be focusing more on the ES moving forward myself to take advantage of the consistency that comes with the ES. The ES orb last week was a beautiful thing. It was a beautiful thing. And this is one of the benefits of trading the ES. We had an ES orb inception, an orb that created another orb. You can see that we didn't get the orb breakout on Friday, and we got the super orb breakout. I'm sorry, this was Thursday session. On Thursday session, we didn't get the orb breakout on the Thursday session. We had the orb kind of do a fake breakout high, a fake breakout low, and then close the session within the opening range. We had the ES break the low starting off the session and then turn around and then break the high. The Nasdaq is not that in tune with its orb. It can be, but for the most part it's not. But when it comes to the ES, you can literally trade previous orbs. Literally. You can look to see where orbs had their orb highs, their orb lows. And it's amazing how the market just comes back and reacts at these levels. It's amazing. You can take advantage of this. You can see that a lot of market participants were literally trying to short the orb lows and the orb highs. And it's not a coincidence that at every stop, it stopped at the orb high. It pulled back to the orb low and pushed back up. They shorted it at that orb low right there. They tried to short it at that orb high. I mean, it's a beautiful thing. The ES is when it comes to these orbs. And we're definitely going to take advantage of that. Actually, let me actually do this now. So, uh, mm, 225. I need to make like 18 points. Mm. Mm. Actually, let me see what I got this already at. Mm. Damn, ES is not making this easy. I might as well just take the bulk of the profits off at uh and this is always my disconnect with the ES. This is always my disconnect with the ES. ES is a size queen, but man, one wrong move can definitely be the account if you're not going to be disciplined about it. I can trade 7 MES contracts and take off. I can trade 7 and get $450 at 12 and 75 or 12 and 3 ticks. Yeah, so basically 12 and 3 ticks. I can just get the $450 daily that I would need. But if I trade it this way where I break it up, I would only get mm, I do it this way, I will only get $30 more. So if I traded 7 MES contracts and traded and took 4 off at the first target, 2 off at the second target, and 1 and leave 1 to run, as it is without adjusting my targets, this will be $483 versus just taking the 45 or the $450 off at the 12 points. Hey, what's up, Team Massive? What's up? This is going to be tough, man. This is definitely going to be tough. This is going to be tough. Mm. Yeah, and Chalk, just pay attention, man. The ES is definitely, it's not hard to trade, but the ES does not have 2 variables that get Nasdaq traders caught up in. She doesn't give out hope, and she isn't a momentum based instrument. She trades structurally. And once you see a break of structure without a push back into structure, that's never a good sign. I'm not saying get out of this position. I mean, obviously, I don't know. But what I will say is that unless price gets back above that equal lows, If price continues to push down, price could be trying to tap last week's close, which that's kind of what the ES usually does. I mean, it's she doesn't do anything different. She's definitely your traditional woman, a traditional housewife. So just pay attention to see if she gets right back above these equal lows and close. She shouldn't close underneath these equal lows. And then price rejected from a double, almost triple top, lower lows or lower highs. That's never a good thing. Lower highs and a break of equal lows is never usually a good thing. So if you're in this, if you are confident, keep your stops tight. Look to see how the market reacts at last week's close. Look to see if price gets back above these equal lows. I'm gonna make a test. I'm gonna make a test. I'm gonna make a test one. I'm gonna make a test. So let me just adjust these. Let me just adjust these real quick because I can always add to the position. I can always add to it. So I make this 7 contracts. 4, 2, 1. Should I keep it a 23 stop? Because yeah, with the ES sometimes, man, it's better to take the bulk of a position off at one target because if you split it up, she may not even hit all the targets, and you don't even make that much. You don't make more than taking it off. So, like I said, this will only be $483 if I leave it this way. But if I just take off 7 contracts I'm just going to round it off to 13 points. I'm gonna make 450 at 13 points, just having everything come off at 13, and I'm only gonna make $30 extra. We'll see. Team Massive, it really depends. It really depends. I don't think the Bears are going to get super aggressive here. I don't believe that they get super aggressive here because there's FOMO buyers in the market. I don't think they get super aggressive, but we could see a situation where the market is going to be aggressively bullish, but the big boys and girls are selling out of their position as the opposite side of the market is aggressively trying to buy it back up as it goes down. I'm gonna well, I might as well just do this now. I got like 5 minutes. Might as well do it now. Might as well do it now. So 7. mm, mm. Okay, we'll see. We'll see. Mm. Okay. Chalk, that's exactly what you want to see here. We need to get a close right back above that equal low right there. That's exactly what you want to see. And you're targeting 84. So this is Friday's close. This area right here was, what is that, the 18th? No, this is last week. And this is last week's close. And this is this week's close. Or 2 weeks ago, this week's or last week's. Okay. All right, let's look at the Nasdaq. I mean, it's kind of obvious on the Nasdaq. I mean, that's obvious. Um, it's definitely obvious on the Nasdaq. Making lower highs and we're making lower lows. That's never bullish. That's never bullish. I'm not saying that we can't get a quick bullish push back up. Not saying that. But usually when we get structured like that, that's usually a trend channel and they're just bouncing back and forth off of that channel usually. Okay. All right, so we made it here to that trend line on gold. We made it. We'll see if the market actually rejects here. You can see that the bulls are trying to push it off of this EMA right now. The bulls are trying to push it off and buy it off of the 21. They're definitely going to have to defeat that resistance trend line coming down. You can already see that they failed already once. And so this is their second try to break it above that trend line. If they fail here, we could see a move back down into the, we could see move back down into the trend. So if you're trading gold, just pay attention to that. Just pay attention to that. But it is past 10 o'clock. So like I said, it can get really loose. So just be mindful with your targets and your stops. ES, well, that's not looking too good right there. Just pay attention. It does look like the ES will be kind of trading back into this area right here. We could potentially see a bounce. I mean, you got this consolidation right here. You got a breakout. You got last week's, not this or so I can be accurate. So you have this is a 2 weeks ago. So this is the 15th close right here. This is this week's close at 484. So Friday closed at 484. The August 15th closed at around 467. So I can just be very clear on the ES. This could be where the market is targeting right here. So if this trade doesn't work out, look to see how the market reacts in this area, and you can make your trading decisions from there. Um, the Nasdaq, I've already said that I'm I'm looking for a big pullback here, a range between about 360 and 330. That's what I'm looking for. 360 about 330. We'll see what happens. But all right, guys, that's it for me tonight. I would try to get some sleep. Obviously, the market is not going to move. We'll probably see some movement when volume gets injected in the market around London. But if you're not a London trader, just get some sleep. Come back to New York, where the volume is going to be there. We can trade the orb, and we're going to try our best to end the session green. So, with that said, uh, we'll definitely come back tomorrow morning, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good